Can you buy crypto with Fidelity? Yes, Fidelity enables its clients to invest in cryptocurrency, although it does so through a somewhat limited structure. Rather than allowing direct purchases of crypto tokens like Bitcoin or Ethereum, Fidelity offers its clients access to cryptocurrency through custodial and digital asset accounts. Two unique avenues, Fidelity Digital Assets and a range of cryptocurrency-related ETFs, offer Fidelity clients exposure to digital assets. Fidelity's digital assets platform is the primary gateway for institutional and high-net-worth investors interested in cryptocurrency. Introduced in 2018, Fidelity Digital Assets primarily caters to institutions, providing crypto custody services and access to trading. Individual retail investors using standard brokerage accounts at Fidelity cannot directly buy, hold, or trade crypto on the platform. This separation has advantages for security-conscious investors, as Fidelity offers secure, offline storage of crypto assets, mitigating risks associated with online storage. However, Fidelity provides alternative routes for retail investors, particularly via Bitcoin-focused funds and ETFs. For instance, investors can invest in Fidelity's crypto-focused mutual funds, including the Fidelity Advantage Bitcoin ETF, a popular choice among U.S. clients. These funds allow exposure to Bitcoin's performance without the need for direct ownership of the tokens, an appealing aspect for investors wary of crypto's volatile market, yet interested in its potential returns. This approach allows Fidelity clients to diversify their portfolios with crypto-based products, while bypassing the need to manage individual wallets or understand crypto transactions. One of the main advantages of buying cryptocurrency indirectly through Fidelity is the company's reputation and the high standards of service it upholds. Fidelity's asset custodianship reassures investors, as crypto investments are managed and protected by a trusted financial institution. This setup minimizes concerns regarding hacking risks or private key management that crypto holders commonly face. For those new to crypto, the ease of handling crypto ETFs within Fidelity's ecosystem, similar to traditional securities, makes it a convenient alternative. On the downside, Fidelity's crypto offering lacks the immediacy and flexibility of direct crypto exchanges like Coinbase or Binance. Fidelity clients cannot directly transfer or withdraw Bitcoin, Ethereum, or other digital assets to personal wallets or external exchanges. Consequently, Fidelity's crypto services may feel restrictive for seasoned crypto traders or those interested in decentralized finance (DeFi) opportunities, which typically require more flexible account setups and direct blockchain interactions. Additionally, indirect investment options such as ETFs come with management fees, typically higher than those on traditional crypto exchanges. While Fidelity's crypto funds offer an indirect route to cryptocurrency gains, these funds may not always track real-time crypto market movements accurately due to fund rebalancing and other management practices. This discrepancy might deter investors who prefer real-time trading or wish to capture crypto's immediate price fluctuations. In conclusion, Fidelity provides a reliable way to gain exposure to cryptocurrency within a well-established financial framework, making it suitable for conservative investors seeking crypto exposure without the full complexities of digital assets. While Fidelity's offerings don't permit direct transferable crypto ownership, the availability of crypto ETFs and institutional services indicates the company's gradual adaptation to this emerging asset class. Those looking for full control, however, may find traditional crypto exchanges more appealing.